All right. Morning, everyone. Welcome back to our morning cuppa at 8. I'm Joseph here. So, looking at the Hang Seng Index on Friday sessions, the index managed to bounce off this uh, 20 days moving average. But last week, despite that the index underwent a fresh bullish momentum, did not break past 26,600 point. So at this juncture, we still keep a bearish trading bias unchanged. Now on the downside, you have to careful on the 20 days moving average. Now in the event that this index falls below the 20 days moving average, then on it will resume corrections towards 100 point level. So at this juncture, we'll still keep the bearish trading bias unchanged with the breakout point at 26,600 point. So as for the Hang Seng Index over the week, you can see that the uh, 981, which is SMIC, right, had led the market moving higher. Then on 941, which is the China Mobile, also went up by 3%. Now, in terms of the banking, the heavyweight 939, right, the Constructions China Bank, CCB, also went up by 5% over the week, together with the 1398, another Chinese bank, went up by 4.4%. Now, meanwhile, two oil and gas counter 883 went up by 4.5%, and 857 China Petrol China went up by 7.3%. Right. This morning we have two trading idea for the technical pick. Firstly, the 981 SMIC, which break past 60 Hong Kong dollar. Can see that on the Friday, right? SMIC charted a long bullish candlestick on the back of high volume. Next hour will be 68, followed by 77. Down support is at 52. Then on the Petrol China 857, also break past the 11 Hong Kong dollar. Now it's trading at a multi-month high at this level. So riding on this momentum, right, Petrol China will be testing 1180, followed by 1250. Thousand support is 1040. Now over the week, we do observe that the crude oil have been moving upwards. Last week it have went up by 4 consecutive days. This week likelihood to test the $100 mark, right? If the breakout happen, the next level will be 110. Now meanwhile, 86 is the immediate support. So over the last week, what happened is that US continued to block off the straits from the Iranian ships, and the Iranian did send delegates to Islamabad, but um, Trump has called off the meeting on the Saturday, mentioning that if Iran is serious in talking, they can just make a call. Meanwhile, he also shows frustrations that right now it looks like Iranian have a lot of infighting, and no one knows who is the ultimate leader right now. So there's a confusion within the Iranian leadership, but meanwhile, the Hormuz Straits continue to see no ships coming out from there. So the crude oil, the immediate resistance will be $100 per barrel. Now, meanwhile, the COMEX Gold, right, after testing this 50 days moving average over the week, right, last Wednesday, right, I experienced a very sharp corrections, and right now, we just about to fall below the 20 days moving average. And if the trend continue, COMEX Gold likely to pull back towards 4,006. This juncture, we still keep a bearish bias on the gold. We think that a very strong resistance will be at a 5,000 level. Now, this 5,000 level is the resistance that being confirmed when the war breakout, or when there's a bearish breakout where in the middle of the March, right? And so as long as the COMEX goes stay below the 5,000 threshold, overall technical setup will be have a downside bias. Okay, and last week S&P 500 continued to move on a higher high basis, led by the few big companies like the Nvidia, AMD, right, as well as Intel, right. Micron also went up by 6% over the week. Now over the week, in terms of the big cap stocks, only Tesla went down by 5%. Now, meanwhile, we also noticed that some of the cybersecurity stocks and some of the consumer stocks starts to actually bottoming and actually moving upwards. Now, in this month, US, the listed coal continue to have their first quarter earnings results. I think market will be continue to see a bit of volatility, but overall, looking at the sentiment, it becomes a risk on right now, especially the funds are actually going for the big cap stocks in the S&P 500. As for Malaysia, over the week, we mentioned about 20-week SMA line, and after last week, Friday, we do see the FBM KLCI managed to climb above the 20-week moving average line. So overall, you look at our FBM KLCI, right, in terms of medium and long-term chart, right, we are using a weekly chart. We do see that on a weekly basis, the setup remains positive. So on a weekly basis, we are looking at 1645. Now, if the trend continues, CI will be testing the 1750. Now, breakout happen, the higher resistance will be at 1008, right? And meanwhile, on the over the week, the technology continued to be the leader among the 13 sectors, went up by 7.6%. Now, it has been a second consecutive weeks that technology have returned a 7% week-on-week basis. Last week, the industrial also went up by 2.3% and followed by the financial services 2%. Now, the only laggards last week or the decliner plantations that went down almost 1% last week. Right, in terms of immediate 2 to 4 weeks trading time frame, right, FKLI right now looks testing the 1720. So we keep a bearish bias until it breaks above 1720. And then on the FCPO, still showing a bullish bias with the downside support at 4004 level. Now, over the week, I think that as we mentioned, among the tech stocks, it went up by 7%, and the leader among the tech stock was the Inari that jumped about 8%. Now, secondly, the Great Tech also over the week it went up by 16%, followed by another peers, KGB 11%, UWC 20%. Now, last week we did mention about Vitrox. I can see that after they announced their results on the Thursday evening, on the Friday, Vitrox went up by another 10%. Based on the chart right now, right, a very strong support has formed at 470 and 430. Riding on this renewed momentum, right, I think that Vitrox will be testing 560 and followed by 6 ringgit. Right, during the analyst briefing last Friday, Vitrox mentioned that about 60% of the products right now is actually support customers that dealing with AI related productions, right? And the Vitrox management also have very optimistic on their growth for the rest of the 2026, and they have mentioned that because of the supply chain bottleneck, right, their sales are being slowed down. If not, they could actually do more because on hand, they have actually a very strong order book and a lot of backlogs to be fulfilled. Right. Meanwhile, over the week, we also observed that press metal, the leader in the industrial sector, have actually went up by 5.7%. I think that retailers doesn't really like companies that above 1 ringgit, but I just want to mention that press metal could be one of the beneficiary on the war, as we understand that the world, one of the world largest smelter in Qatar have been destroyed, right? And sorry, have been shut down. Right, it will take years for the smelter to be back online. Now, during these shortages of the aluminium, right, prices will maintain at a high level. So one of the smelter in Sarawak, which is powered by hydro power, right? One of the ESG name press metal has been actually moving up. Right, last week it break past 8 ringgit, and according to the Iman resistance, next one will be 850 and followed by 885, right? And downside support is at 770, right? Overall setup remains bullish so far. Apart from Vitrox, tech stocks, we'll be looking at the consumer name, right? Life Water, right? Right now it's consolidating sideways. We do not discount that possibility that today, Life Water may resume their upside movement, right? If that happens, R1 will be at 150, followed by 170, downside support 135 and 120. Now, before I forget, I just want to mention that another counter, which is Gamuda, right? Over the weekend, we received a report that one of our industry peers, they have downgraded Gamuda, citing a reason that Gamuda margins may be affected due to a rising the oil price and also the diesel prices. Based on the Friday price actions, you do see that Gamuda have corrections went below the 440. So if this week Gamuda falls below 405 or falls below the 50 and 20 days moving average, then on Gamuda does see a downside risk so far. So in terms of sector, I think technology still remains very bullish. You can see that the based on the sector right now, technology, and then industrial, and also one of the sector I forgot to mention is actually the financial. Now, after consolidations for about 1 month, you do see that CIMB and Maybank are eyeing to resume their upside movement so far. So last week, last check, CIMB, the share price are still giving about 6% dividend yield for the 2026 financial year. Now, based on trading stocks this morning, I'll be looking at a Keyfield International that break past at 1 ringgit and 70 cents on the back of high volume. The next hour will be 1 ringgit and 83 and followed by 1 ringgit and 95. Downside support is 1 ringgit and 55. Secondly, we have another OSV player, Perdana, also breakout 19 cents resistance. The next resistance will be 21 cents and followed by 22 cent half. Downside support is 17 and a half. So we have two breakout stocks, which is in the OSV segment, Keyfield International, and followed by Perdana in petroleum. Okay, I'll stop here and pass on to Yong on the Rasa Meng Horng report. Thank you.
Thank you, Joseph. Let me share my screen. So thank you all for joining the call. Currently, we are still seeing a continued improvement in the worry sentiment index, which you can see from the blue line here on all over the charts. So this is coming from due to our cited buy fighter forecast, where we continue to price in a perpetual ceasefire scenario has continued to materialize. So as what mentioned earlier by Joseph also, so Trump has announced that the ceasefire will continue until the Iran leaders representatives submit a unified proposal to end the war with US and Israel. So our index has continued to see that the stock the risk taking is continue and the improvement has gone across. So looking ahead, we're seeing this to continue into the coming week. So we hope that continue to see some de-escalations in the tensions. So other than that, our asset allocation strategies continue to overweight selected equities for US and ASEAN, as well as fixed income has continued to play out quite nicely. So we can see that S&P 500 as well as the Nasdaq has rallied quite significantly. So since our publications, the KLCI has also moved up slightly around 2.5%, as well as other key stock in the ASEAN markets. So we continue to maintain our formation strategy. So owing to the view that the ceasefire will hold into coming week with a fresh ceasefire news between Israel and Lebanon for another 3 weeks. So, despite the optimism of the markets, we continue to see some cautious, particularly in the inflations. So, if you look at the charts here and for ASEAN, non-ASEAN and ASEAN, so we can see some recent pickup print in the New Zealand, UK, as well as and projects for ASEAN is Japan's as well as Singapore. So, risk has been showing that inflation momentum has picking up, and this is likely due to three key reasons. First, we saw that primary could be the food prices coming from El Nino impact. But this is a risk that happened in 2024, where the high temperature has reduced the commodity yields as well as agricultural products. So in other factors according to food, so we also see some pickup in the fertilizer prices, particular in due to as these fertilizers has connections toward high energy prices. Uh, and third, other than that, we also see some uh, pass through coming from the high oil prices in the Middle East, which has affected across the logistic, utilities, and manufacturing. So, other than the CPI, what data we have looking uh, to have a look on this week? Bank of Japan, Bank of Canada, U.S. Federal Reserve on the next 2 days, as well as uh, Bank of Thailand, Bank of England, and European Central Bank. So these are the meetings of the central bank across the regions that we look at. So that's all from me. I will pass on to the next speaker. Thank you.
Great. Thanks, Yong. We have a report on the energy sector. So we maintain our overweight stance on the energy sector. Our topics are Tenaga, YTL Power, SolarWest, and Simaden. We think that if the Middle East conflict continue to persist, we do find that the energy sector remain to be a very defensive sector, giving you about 4 to 5% yield from the more bigger cap stocks names. In this report, essentially, we're looking at what's the impact of the higher energy prices on the tariff as well as the earnings of the companies. In summary, basically, any sort of higher energy prices are passed on via tariff adjustment. Hence, that's why it should be neutral, earnings neutral on the likes of Tenaga Nasional as well as YTL Power and Malakoff. But however, if you do look at in terms of the tariff adjustment, recall that since July last year, the government has imposed the automatic fuel adjustment or AFA, which is basically a monthly tariff adjustment to reflect your prevailing fuel cost prices, meaning coal and gas. Even then, the government has basically sort of only forecast a surcharge of 0.08 cents in July compared to a 0.5 cents rebate currently, mainly to reflect a higher tier 2 gas, which is subsidized gas price, which is also mitigated by a stronger ringgit against the US dollars, as well as a lower tier 1 subsidized gas price as well. Hence, the impact on tariff is actually quite minimal. It's roughly only about 1% increase from the current tariffs that you're paying. And also it's quite flat on a year-on-year basis. That said, I think the sensitivity test, sensitivity or correlation to Brent oil is actually quite low. So assuming that basically because it makes up about 10% of the generation cost, assuming that every movement in $10 per barrel of Brent oil price will only impact the AFA by 0.01 cents. Coal prices have a much larger impact given that 60% of our fuel costs are generated by coal. And we estimate that coal price will actually need to hit about $180 per ton. Now it's roughly about 140 in order to result in a 3 cents sort of surcharge. Aside from that, we also provided a brief earnings outlook for the coming quarter. We are looking at about 8 to 9% earnings growth of Tenaga on an expected lower tax rate, so higher regulated revenue contribution. YTL also, we are expecting to see a share of loss of about 83 million for its stake in DNB, but this is mitigated by stronger water as well data center business. But we also do expect SolarWest and Simaden earnings to be higher, given on better recognition of their projects. So again, our topic is Tenaga, YTL Power, and we also we also advise clients also to pick up SolarWest and Simaden following the share price weakness from the recent sell down. I'll stop here and then I'll pass the time to our next presenter. Thank you.
Let me just move on to results review on Unisem. This is the first quarter FY26 results. Essentially, it's a core loss of 9.5 million, which is below expectations. This is despite, a year-on-year higher revenue of about 9.7%, amidst stronger loadings and the sector upcycle. The EBITDA actually declined, 12.4% year-on-year to 62.6 million as margin compressions were tracked by, the Forex, ongoing expansions at the Gopeng plant, lower utilizations, rate in China, Chengdu, as well as a higher input prices, on the materials. So the call loss of 9.5 million is missing consensus expectations of about 131 million profit in FY26 itself. Now, in terms of the headcounts, I think they increased marginally to 7,468, which is about 110 more personnel Q on Q. CapEx also rose about 102 million from 96.6 million in fourth quarter and 25. Q on Q wise, I think it's also similar trends. You are seeing a weaker numbers due to the above mentioned reasons. Now, in terms of outlook, into the second quarter and second half, management's guiding for a strong second quarter with immediate turnaround of and the bottom line performance. They're guiding a revenue to grow about 15 to 20% Q on Q. This is a testament to the robust demand momentum as well as the ramp up of various new programs. Now, on Chengdu, they are expected to resume, to near full capacities, whereas Malaysia operations are expected to break even in second quarter. Now, there are certain, ASP revision exercise for selected products and customers are underway, to offset the rising material as well as operating costs. Whereas on UAT bumping facilities is expected to normalize and turns earnings accretive in the second half of 26, supported by both pricing adjustment as well as a new contribution from customers. The new Gopeng plant is currently running about 30 to 40% capacities. They are expected to contribute about 40 to 50% of overall Malaysia revenue. There are also certain equipments have been redeployed to Chengdu to support the demand fulfillment in China. Now, we lower our FY26 earnings by 9%. This is to reflect a weaker margin following the loss-making quarter in the first quarter. Target price is revised down to 3.37. It was 3.48, based on an unchanged 30 times mid FY27 P. We still maintain neutral on the stocks as we believe the meaningful earnings recovery as well as our valuations should only revert to a more attractive level in the second half of 26 as the margin expansion driven by both production efficiency, higher contributions from new projects. Now, the next reports will be on the CTOS Digital. This is also a first quarter results. First quarter core PATAMI of 19.6 million came in within expectation. The growth was mainly contributed by higher top line growth as well as associate contributions. The full year numbers usually make up about 40% of the first half usually make up about 40% of the full year number. Hence, although the first quarter is only about 20% of full year forecast, we deem the results as in line. The EBITDA margin was rather stable with higher revenue offset by elevated IT costs as the group continued to invest on cloud infrastructure. Now, I think sequentially, the PATAMI as well as about top line actually contracted mainly on seasonality effect. As mentioned earlier, first half is usually the weaker half, for the company. Now, with the top line, growth across all segments are visible, across key accounts, across the direct to consumer as well as the international segments, with only the exceptions of the commercial segment, which clock in a flattish, year-on-year performance at negative 0.4% revenue. Now, in terms of outlook, I think the company is strategically transformed into a trusted intelligence provider with various multi-pronged growth strategies in new collaborations, customer acquisitions, as well as new various digital as well as analytical products was expected to be rolled out. In addition, they are also exercising, various cost discipline, across the organizations, expected to gain from both automation and productivity gains as they migrated into cloud as well as adopt the AI solutions. Now, the target cost to income ratio is to decrease, the cost to income ratio from the current 46% to about 42 to 43% over the next 3 years. Now, there is also regulatory, tailwinds, for the stocks. The Consumer Credit Act 2025, which takes effect in 1st of March, that requires all the non-bank lenders, including all the BNPL players, to submit data to credit bureaus, as well as perform creditworthiness check under the oversight of the Consumer Credit Commissions. Now, this essentially, benefits CTOS in both ways, from data pool as well as the potential monetization opportunities. Now that you have extra, data from these underserved thin file segments, which lacks formal credit history. I think second of all, we should see higher data consumptions from all these non-bank lenders, which now requires to perform various credit worthiness checks. Now, no change to our earnings forecast, target price of 1 ringgit 11 cent, as well as our buy recommendations. At the current valuations of about 16 times PE, we think both the earnings as well as share price are positions for a recovery on the back of a sector tailwinds, and as CTOS executes its new transformation strategy to regain investor confidence. Maintain buy the stocks, target price at 1 ringgit and 11 cent. I think that's all from us today. Thank you for listening. We should see you again tomorrow.